Welcome to TradeTheMBI.com. This is John. This report is for the 10th of January. Well, we had a continuation of it, but we recognized that going into there, we were breaking down a bit. We've had cyan up above, which meant shorts were starting to activate, not coincidentally right at this 50%. We moved slightly above it, and then, as I mentioned, we were going to get close to that 2600, and I was looking for right around 96 that we would see shorts if they were going to start taking advantage of that build up towards it and start building a position, and it's kind of exactly what they did prior to that 26 algo level. And not surprisingly, when you typically break out about these 50%, you retrace back to it, but within some bearish configurations, almost have orange above steel, which would create effectively a short setup. So bearish thoughts not out of mind. In fact, I was pretty confident with it because of, well, I'll show you on my 50K chart in just a few minutes before we get to the intraday stuff. NQ performing identical, so everything's consistent there. The rise in the euro, we knew that this was coming, despite the fact that, the continued weakness in the euro, with the idea that maybe the U.S. isn't going to continue to raise rates, means certainly you should buy the euro, because it's the economy there is just so super strong, which it's not. So that's kind of facetious, but it's an interesting play on how that dynamic works. The idea that there's going to be more easing in the Eurozone, well, at least they said they weren't going to, but they're going to have to. And nobody's liking anything when it comes to currencies because of the way that's going, and so, hey, gold, absolutely. And that's been pretty consistent from that trade. We've been in a cyan under red for most of this period, and when we weren't, we were still riding high with the shakeout readings, so not a shocker from that standpoint. So here's what I was talking about. Well, this is just the later part of intraday, and the ending part of it was good. We ended up getting to, we made it all the way up to like 97 something, and 97 and 96 and a quarter is what it says there for the 100%. Anyway, let me show you the 50K first, because that's where, this is that new setup program that I was talking about. It's not complete yet. The little white candles were really supposed to represent the fact that we've had the orange cross and cyan is above steel, not perfect in that configuration. Some of the other ones we want to add will be, well, in this particular case, I don't think it shows up until there's a histogram below the magenta of the shakeout. The difficulty we get with this when we don't have magenta that's in excess of 10. So I have to put a limitation on that. Some of the ones that are lower, you can be a little more aggressive. But right as we were closing the day, we ended up with a couple of these, and so took advantage of this setup, which corresponded pretty well to the 5K chart. In fact, I think I'm pretty close to that entry. Let me go up and look at where it is. Yeah, the 8650 is exactly the close. This one was 86, it was slightly better, and that's because the intraday. So it looks like from an intraday standpoint, right here, and typically you just follow it. This was much higher. That was my original that I traded out a part of it, so I only have the small portion left. We even had a couple at the 90. So from there, what it does is it produces, well, I colored it cyan just for the benefit of being able to recognize it. That's why it shows white at the top. But nice from a move, 19 3/4 points. I set stop down there, just above that by a tick, and you'll notice I have twice as many because that is a buy signal. So I'm avoiding the downside, and it will catch me if it goes to the upside. Now, I could, on a buy signal or one that presents a little bit stronger at that particular spot, turn around. And typically with this kind of trade, that buy with the even ABM reset right there shows you how below the zero you would be. But the beautiful thing about this, we don't expect a new low to be made when you get a candle signal like this. So this is going to make adjustments to the ABM. We're not going to have a stop that goes down there. The stop will be the zero. So you basically will have the range between the close of 71 and the 64. So it's a much tighter ability for a stop compared to the double ATR. And so you would just take probably a quarter or half ATR below the low, just as a buffer. So it's kind of interesting. It works out very effectively. It happened several other times. It's not such a simple thing to program. It's easy for us to see that the orange crosses above steel, fine, that's the beginning trigger. But not every time does it happen where the cyan is in between. So, and then there are other times where, well, like in this one, the green will go above cyan first on a bullish one before you get the crossover of steel. And sometimes you don't even get a crossover of steel, and that becomes a separate situation. So there's a lot of these little nuanced things you've got to cover in there, and then obviously understanding the idea between a broader trend. All this will show up to you as we'll end up with a colored candle. It'll be like one of those magenta ones that you'll have the green trade. It'll go magenta, and then the rest of this will just stay red. All this is with the gold candle. It's not our normal gold with the shakeout gold rising. This just represents a dip below the red line. Because we know that when we have a dip below the red line, even if you get a pop, you're likely to come revisit that pop, which played out quite well. Let's take a look at some of what happened with these setups, though. Super clean in a lot of the cases. They were really nice configurations. And what was beautiful about it is from later on, after the initial dips we had, so here it is, the orange crosses above, beautiful one where the steel crosses below and cyan's right in the middle for a short snake, and you're already below the red with the green. Easy, and boom, so you're just able to take that direct, and I love it when it crosses, you get the signal right at the ABM. It's like, okay, yeah, you took a couple of ticks of heat, and that was quite a few points, if I'm not mistaken. So it closed from there, 85, and even if you pick just the 23% at 74, it's still over 11 points, and then it turned around nice long. Now, what was beautiful about this long is you get this beautiful orange candle, so we know the lows are likely for this to be revisited, usually after a run, and of course that does happen. Secondarily, we ended up with a positive extreme, which was beautiful because it created it right here at the 78.50 level. So when we started with the up move, and we started to get a couple of these signals, and we had a nice soft one where they were, because it was still somewhat bullish when you have that red over zero. So all you're looking for is a few points, and that just took us back to the 76. But we ended up with a short signal over here that just did not seem to work out. You had the DOC spread right here, and we got a little bit of a dip, wasn't a whole lot, and then obviously the steel had crossed, and then it popped back up, only to produce this one. And I thought when we got close to here, it's like, oh, it didn't quite fill it, and that can happen, where it didn't quite fill the positive extreme. I thought about, being right at the 50% that it was from here, but didn't even get to that one. It was like a fraction above. And then we popped back up, and sure enough, put in another clean signal with this one, and we kind of stayed flat, and I was like, what is going on? This should be breaking down a lot stronger. And then so it did it again, added to that, and then that one is the one that took off, and didn't quite fill it at first here, and then it started back up. I was like, what's going on? And no, it did break down. It just, you have to sometimes be patient with it. Plus the fact that this one created another orange candle, so we knew that low was going to be revisited, so I really wasn't worried too much about that. And sure enough, gave another signal. Right there again, orange above, steel crosses, cyan is above steel, and of course green breaking down, and that one has led to this return, which filled in this orange right here, returned us right back to the 50%. And of course you can see that orange candle pretty close to producing in the exact same area where we see from the other setup that's producing the buy configuration within super oversold. And the key with this is like sometimes when you look at just the Diocon paint, sometimes it'll put a candle, a yellow candle or whatever, in the declining lows. We never like to buy new lows being made. You need stability down at the bottom in a building, and ideally a P2 setup is where we're working with the other program to do that. Earlier, in the day, it was mostly just the bullish. Everything had pretty much stayed up at the elevated areas, and really wasn't anything difficult with it. It just was kind of choppy up at the top, so it looked like strength. But as you get towards those even numbers, it became much more interesting when you looked at the bigger time frames to see that shorts were certainly far more active. And that's just part and parcel of the way you would react to it. I wasn't really interested in the mid 80s and stuff like that. Even taking those ones at 86 and 87, I was like, okay, I'm not expecting a whole lot. It's what I was mentioning to you on the Skype chat. But once we got into the mid 90s, it certainly became much more interesting to do the short setups and some pretty decent retrace, of course, and beautiful to have that daily 50% mark, just so that, you know, when it gets there, you know, hey, it's worth taking a nice gain on that. Now, if we had continued weakness readings at this spot, but no, we started producing buy. We were at the super oversold, and you got to respect that, because you can see, I mean, they bought it all the way back up to the top again, tried it one more time, couldn't do it, didn't quite come down as much. They tried it again, couldn't even get up there, and then that's when it started to fail. So people start doing these head and shoulder patterns, blah, 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 blah. We don't need that. We can be much more accurate doing these in between setups, or just following something like the 50K, where, whoops, I went too far with that one. Just the wrong one there again. We'll get it right. There we go. And that's decent. And what this will do is it'll go until it produces a new setup return. Obviously, we'll see it. We're getting into some deeper red DOC setups here, almost moving below into the oversold, which not that bad when you're moving into oversold and you're still above the 50% from a 50K off of this enormous run. So all in all, this is how the Opus program will be adjusted. So it'll end up following these trends, because you can see, following this from an ABM reset with the green right there, no real violation of any kind, way, shape, or form until we just got to here, because it all started to pile up at the top, and we started to see much broader weakness, which really developed right about over here. That's when we first started to see the sign. That was right around 82 3/4, and then it built up just a little bit to where both these signals came in here, right here, then beginning at 90, and then also getting 86. So pretty consistent with that. Now here we are at 66. So hopefully you're liking all that, and we'll get that out as soon as I can finalize the last of those details, and it'll just keep it simple. Now I'll still have the availability for like the scam function one, because I think it's interesting when you can see some of these anomaly candles that let you know, hey, I got a real good likelihood I'm going to be revisiting this one on any kind of pop. Obviously having the positive extremes, you can see it, but it's just nice when a dot pops up. It just lets you know, hey, you get some activity with the algos here. There's activity that says pay attention, and even at dips, it's letting you know, hey, this is pretty bullish when we have that crossover of the steel. Even with the dips below the red line, it's like I knew this low is going to be retraced, but in the interim, I'm going to get potentially a pop. So my expectation is that this is not going to cross, and as soon as it does, you know, that's sort of your final warning right there. You know, that happened at 84. You dip down, it's like, okay, that's a bonus for you. Take it or don't, and then you get the full bullish by the time you cross that bar, and that was at the lowest at 82, and it took off from there. And so you can't be afraid to pay attention to that. Here we are in more of a bearish spread. It's moving even closer towards the lows there, so definitely some weakness expressed now that we're below the 50%, so it's going to be interesting. This is always going to be a fight back and forth until one side develops enough strength, and what we're seeing on the daily is a little bit more troubling. So pay attention to that, because it means that there could be a more decent downside trade to that setup. As always, though, trade well. I'll keep you updated as I continue this. If you don't see me post as much, usually because it's in hard at it programming. So, anyway, have a good one. We'll talk later.